Okay. Doom is preparing for live streaming. And I guess we had some big shakeups in our SmackDown.
Yes. Yes, we have a new winner.
Uh-oh. All right. Welcome, everybody. Option Genius show coming at you. Last show for January of 2026. A lot of stuff going on today. My condolences to everyone who was in gold and silver and platinum and all the medals. Big bloodbath today.
Certainly.
And that's why we always tell you that trading is risky and you can lose money. And so just take everything we say as entertainment value.
Right. Pay attention. Pay attention.
Oh man. So yes, markets are down today. Um, silver is down currently 26%. It was down over 33%. Platinum is down 18, almost 19%. It was down more than 20. Gold is down 8%. It was down more than 10. Um, the AGQ, which was Michael's winner of the SmackDown last month, today is down, drum roll please, 59%.
Wow. So that's the minor, right? So
That is a three-time silver, ETF. Yes, that is down 59%.
let's just
So
talk a 30% drop in a day.
one day. Yep. And so yeah, I I am also in pain today. Uh for
Part
me,
of trading.
yeah, I mean easy come, easy go. Jeez. We've been talking about this
Yeah.
and in the last what was it, two shows ago, I don't know, like I told the story about me and my wife and I was like, "Hey, why?" She's like, "Why aren't you showing any emotion?" Well, because the money was not in my hands. And it's all gone now.
Yeah.
So,
You did get out of silver.
yes, I did get out of silver. So it could have been worse, but I'm basically back to almost where I started the year at.
Right.
So down a lot. Yeah, today.
Yeah. So these are the real feelings, that we talk about for
Yeah.
sure.
Um, and so could I have done anything differently? Probably. The signs were there, right? When silver popped, we could have gotten out of everything and it would have been very nice. But I didn't. And I mean, I stayed out of silver, but I was still in gold. And then I got into one platinum and that didn't make any money at all. That was a big loser. So, I've learned, and the big thing was, I'm an option seller
Mhm.
and I was playing in futures
Right.
and I was probably overexposed. So I had, the gold, I had two gold contracts. That was a margin of like 90,000. That's probably too big for my, $500,000 account. That's
Yeah.
way too big. I mean, I have margin, portfolio margin, but still, um, because when you can lose over $100,000 in a day, yeah, you're probably trading too much.
Right. Right.
You're trading too heavy on that sucker. Yes,
Yeah. I mean, you're taking a pretty good
it was a
stab,
big
if you will.
risk,
Yeah, at it.
big risk.
Yep.
Yep. And so there we go. But yeah, so the question today for today's show is, do you buy the dip? And I'm not just talking about the metals, I'm talking about pretty much everything.
Hmm.
Because the this last week markets are down overall. SP's down, Dow's down, Nasdaq's down. We had big tech earnings. Uh, Based on that, Microsoft is down more than 10%. Amazon, I don't think came out yet, but Meta was up. Tesla was up. No, Tesla was down, and then it came up a little bit yesterday.
Yep.
Um, and so it's everything's all over the board. You have companies that are now memory companies, right? Like Western Digital and SanDisk and these guys who make USB drives and memory chips. And they have been going up 10, 20% every day. Today, SanDisk is still up I think over 20%, but Western Digital and the other ones are down 10%. And that's not a move that these companies normally make. So
Right.
things are getting very overexposed. They're getting too dicey. They're getting too the moves are too big. The average true range is
Hmm.
enormous at this point. Um, and so does it feel like something is coming, like a big drop is coming? I think it does, but I don't know if we're going to get it.
Okay.
And so, we've been saying, and we've been saying, hey, look, as January goes, still goes the year. Today is the end of the month. Today is the end of January. S&P will be up for January. And so if that holds, it should be up for the rest of the year. So that's one component of yes, you should buy the dip.
And I
Maybe
think
just
there's a great percentage, right? I think I forget what percentage you put on it, or
it's
what they
yeah,
say it's high.
it's
Yeah.
overwhelming. Yeah, it's almost like it almost happens every time. Um, the other thing, the big news that kind of kicked it off was that Trump announced his pick for Fed chair. And you and I were discussing this earlier, and I think we are opposite opinions. I think he's going to do whatever the heck Trump wants. You thought a little bit different.
I don't know if I think differently. It's what I read. So I do agree with you. I think that when it comes down to it, he's going to do exactly what Trump wanted him to do, right? So it's kind of said silently by his appointment that he's going to do what he wants him to do. And I think he's going to do that. So I think ultimately he's going to be a rate cutter. But what I read was that he is historically doesn't line up that way. But I do think ultimately he will become a rate cutter.
Yeah, I mean, he was on the Fed before.
Hmm.
He was appointed by Bush, and he was there during the time of all the quantitative easing and whatnot, but he didn't really like the way they were doing it,
Hmm.
even though he helped them get it started.
And
So
that's a different time period too, in my mind, right? So the situation is different now than it was then.
yeah, I mean, you can make an argument and be like, oh, market, the economy is doing great, unemployment is really low, inflation is less than 3%. So yeah, we should go ahead and cut rates. And I think the argument that Trump is making is that if you have lower rates, that will help businesses refinance, or not refinance, but they will borrow more money to expand. Um, Homeowners or individuals will be able to refinance. So you'll be able to refinance your mortgage if it goes low enough. You'll be able to buy a house maybe if it goes low enough. You'll be able to refinance your credit cards and your student loans and all that stuff if it goes low enough. And that will also help the government with all the debt, right? So they have a
Which
lot
is
of,
a huge ticking time bomb.
yeah. So they have all this debt. They need to, hopefully they can roll it off. And then the new debt that they do comes out at a lower interest rate. But since his appointment, the 2 year and the 10 year have both gone higher, meaning interest rates are going up, not down. So yeah, it's interesting. And this was the first time that he did something that actually caused gold and the metals to go down.
Well,
Normally he opens his mouth and it's like, oh, gold is up again.
I think the world is kind of awakening to the fact that we may not be able to fix the problem as easily as we did before.
Maybe. Yep. I don't think I mean, I think the world already knew about it. It's just, when are
Well,
you
I mean,
gonna,
there's a general confidence in the US dollar, and I think that's been obviously it's been going down over time. So I think that that has something to do with it. I'm not all of it, but it definitely plays into some of the psyche of what's going on, I think.
right. So the dollar is going down. That is good for companies that sell overseas,
And we
right?
really kind of want that, right? Because we don't want to do that.
Yes and no. But the problem with that is that with the dollar going down and the rates, if they go down, people are going to, I mean, You know, dollar down means commodities up,
Mhm.
right? Lower rates means dollar down, means commodities up. And usually means stocks up because you can sell your stuff is cheaper overseas. But the emerging markets for in Europe for the last, I don't know, 15 years, if you had invested in them in the emerging markets, you didn't really make anything. Last year they were up 30% because the dollar was down. With the strong
Yeah.
dollar, you don't invest overseas. Low dollar, you do in overseas does really good. So, you know, I think overseas markets will probably again do better this year than the US market. So we're talking about like, Asian technology companies, we're talking about European banks, even if it's commodity rich, Australian commodity companies, Canadian commodity companies, all the sorts of things. So,
Yeah, I mean that's the trend, and I see it continuing for sure.
yeah. So, in terms of the theme, right? Do you buy the dip? Long term, yes, the markets will probably rally because if the rates go down, they're going to go up. Um, Inflation will go up as well, but they'll go hand in hand. So I don't know if as a populace, will be in a better situation. But in terms of a stock market,
Probably not, I would have to say. I mean,
I would say this.
inflation's a real thing, right? So it's like,
Yeah, I mean, the K economy is continuing to be more and more stretched. So, uh, and then which we call it, the chip names, right? So, or let's talk about the metals. So, gold is still being bought by all of the central banks. They're not going to stop.
nope.
Gold is also being bought by like stable coins and Tether and private companies to run their stable coins and help them for some reason. And so I think it continues to rise. Will it get a pullback? Yes, because it's run a lot, but people are going to still buy it. So I think any dip there probably should be bought. In terms of silver, different story because it ran up a lot, and so it was due for a pullback. Should you buy the dip in silver? Well, silver is used in memory chips, in AI chips, definitely in the RAM, like I talked about, the GPUs, all those. It's also used primarily in solar panels, and there is a shortage of silver. China is not exporting any silver. Some of the miners some of the miners that are silver miners,
Mhm.
even gold miners, they are having trouble with production.
There's a
Every
real issue in silver.
Yeah,
Yeah.
I mean, it's silver and gold and mining is still, guys going into the mountain and banging and stuff and trying to, it's still
Yeah,
done that way.
yeah, yeah.
And so you have mudslides and you have snow slides, avalanches, and you have all these issues that takes months and months before the mine can reopen. And we've seen several companies have issues like that. And so that puts a damper on production. So the company could say, yes, this year we're going to produce this much, but they don't control the weather. And so if something is shut down, that's obviously less coming on board. And there really is no extra silver lying around. So,
No, and
uh,
it's used in data centers, like you said, everything.
yeah.
Real big
So,
industrial use.
so I was listening to the CEO of Western Digital earlier today, and he's saying that, um, his chips, memory chips, they go into computers, they go into the AI units, they go into even robots now and cars and everything. They don't sell as much in cars, but their memory does go into a lot of different things. Um, but his biggest customers are these hyperscalers, which are the Googles and the Facebooks and the Amazons. And he's saying that they have contracts with them for 2 years or 3 years, and that has never happened in the past because memory is just memory, I mean, one
Mhm.
USB drive is the same as another USB drive, so you don't care. But now they are specifically having contracts. Um, it's not a commodity as much anymore, or if it is, it's a very commodity and very high demand. And so that's why you see SanDisk and all these other companies just shooting to the moon. But they all need silver. So my point is that the demand and the offer and the contracts are all there, but they cannot make the chips without the silver.
Yeah.
So if there's somebody at the end of the line saying, "Hey, I'm going to throw billions and billions of dollars at this," that money has to flow down, and prices on everything down the line will increase. So, is silver down 30% today or 27% right now? Is that a good thing? I think it's a dip to buy, you know?
Yeah.
Um,
I
because
always
the
think of like if there was an actual like, hey, we want the actual physical delivery of gold, you know? Like what would happen in this case? It's just
well, they can't. There's not enough.
yeah, I know they can't, but it's interesting to think about.
Yeah. So we talked about that on an earlier show, like even at the commodities, they don't there's not there. There's no
Yeah, love
physical
that.
silver for delivery. And
Just crazy.
so if enough people said yes, we want delivery,
Yeah,
yeah, we could look at, $300 silver. We could look at what happened to oil when it went to negative zero. It went to like negative $30 or something because of an issue at expiration
yeah,
with supply. They had oversupply. Right now we're at undersupply. So could it go to $1,000 a thing for a day? Yes, it could if something happened crazy like that at futures expiration.
right.
I don't think that'll happen. They probably have contingencies in place
I would see
that'll.
it happening, of course, in silver rather than gold, though.
Yes. Yeah, 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 definitely. So I think, both gold, silver, I think you buy the dip. In the market, long term, I think it's going to continue to rally this year. It'll be a good year, I think, for the market. Are we going to see volatility? Oh, heck yeah. We'll see a lot more ups and downs and ups and downs. But over the course, I think it's going to, by the end of the year, I think it'll be higher.
Yeah, and I think it's you talked about this a lot, and you can see it in the contest that we had. There are a lot of silver miners, right, that will continue to profit off of this move, I think.
They will. I don't know if they're going to do as good as the actual metal,
Hmm.
just because of, I've been listening to some of their conference calls and some of their issues, and it's like, oh yeah, they're making a lot more money, but their production is just not there.
Right. It's
They're having lots of trouble with people. They're having lots of trouble with technology and the weather, and they have whatever excuses. So I'm thinking, I'd rather just maybe just be in the middle.
isn't it interesting, like even last year, like silver wasn't on really anyone's radar that much. All of a sudden it's like, boom, silver. Everyone's talking about silver. So it just kind of shows you where we're at a point in time. So take it with us
Hmm.
for
Yep. Um, so we talked about two big things. What else? Uh, do you buy other like what else is dipping? Everything else is.
like in the market, the general market, I just see general pullbacks. I don't see anything of significance, right? So I think it's a case where you're dollar cost averaging into it. You're buying the dip nonetheless, but in smaller amounts.
What do you think about oil? Oil's up to 65 today. It's down a
Oil,
little
I am
bit,
a
but
little concerned that with all the geopolitics going on, that I'd be very cautious to the upside, right? Because of what's going on. If we talked about it before, if Iran, all of a sudden they just cut off the Strait of Hormuz, that could be a big spike, right? That could knock you out of some positions. Um, I'm more comfortable to the put side since we've dropped so much over time,
Hmm.
as opposed to the call side.
Yeah, no, I mean the puts, the way we've been doing them,
Mhm.
they have been doing great. They did great all
Fantastic.
year, all year.
We had a great last year.
It was a great year. And so that I think will continue, especially with oil now jumping up to 65. That's probably having to do with Iran. So it might come back down to 60. I know Trump wants it to be lower. Um, and experts had predicted oil this month in January to be around 40 because of the oversupply.
Hmm.
But that oversupply is not there. And so that was another one. Yeah, buy the dip. That was a buy the
Yeah.
dip.
Yeah.
But that one is pulling up. So I don't know if it's going to go much higher. If there is the Armada is there, so I don't know if the Strait will be able to close or Iran will be able to do anything. Um,
I could see a temporary spike in this, but I
yeah,
think ahead of midterms, he's going to make sure that oil is somehow.
yes,
I
yeah.
would,
I believe before the midterm, he's going to act both on Greenland and Iran.
I mean, what if most people, let's face it, get really upset about here is gas prices, right? So it's very important that he keeps them low.
Hmm.
Um, yeah, yeah, definitely interesting for sure.
So so that was that. Um, but in terms of, you know, trading, the way we trade, I think everything is pretty still smooth. Everything is going okay. We've had some stocks that have sold off unexpectedly. Um, but we have also had a run up into the year, right? So we've had a 20% return on the SPX the last 2 years. So a lot of stocks have gone up. They've made all-time highs again and again and again. And they've kind of gotten ahead of themselves. Defense stocks and chip stocks and semiconductor stocks and companies that make the factories for the semiconductors and the chips and the electric companies that provide the electricity and the energy and the hyperscalers and all these guys. I think it's all gotten a little ahead of themselves, and I think they're all due for a bit of a pullback. You see Tesla pulling back, you see Netflix pulling back, you see Microsoft pulling back. But over the long term, I believe that these are all opportunities to be bought.
Yeah, I agree with that. It's interesting that you go back to the basics of things, right? So, you have to look at I think it's a little confusing at this time because the technology is moving so fast, so people have a hard time valuing what is actually good, or like what's a really good value right now, right? And it's hard to put a price on something that's moving so quickly. But it comes back to me in my mind how directionally we know where it's going. You just have to be cautious about the pullbacks, I think, in this process.
Hmm. Yeah. And I think it's about you just focus on the big picture. Like, what is the underlying big picture that is driving everything?
Mhm.
For gold, it was central banks. That's still in place. So as long as that's in place, I think you still stay the course. There are going to be pullbacks. Yeah, for sure. Definitely. It got overextended. Do you overtrade? No. If you do, like I did, you get slapped. Right?
I
It's
could put
like,
that in
hey,
mind.
you are taking too much risk. You are going to get burned. You play with matches and you're not paying attention, you're going to get burned. And that's kind of what happened. Um, the leverage ETFs, those are also very, very risky. Mike's watching, and he posted in the comments that yeah, AGQ is down, or AGQ is down 58%, which is, yep, it's down 60% now. And in one day.
Yeah.
So it had a hell of a run. Is the run over? No. Would you get in here? Maybe. Maybe.
Yeah, we can't defy the laws of physics.
That
Um,
might be a dip
we do
that
it for a
I,
little bit, right? But
yeah,
soon you're gonna have to come back to a little bit of normalcy.
yeah. But even that, like, silver's down 27%. That's overdone. That's
Right.
it was overdone on the upside. It's going to be overdone on the downside. Could it keep going? Yes. And then could it overshoot on the downside? Yes.
Yeah.
So, getting in today, not necessary. You see the big thing, you wait a couple days, let it settle down, and then tell you where it wants to go.
Yeah, and then you pan out, like you said, to the big picture. I'm always thinking of the big picture on everything. So you could take it over to the market and be like, okay, they're going to continue to rate cut. We know that, right? Going forward, we know that there's a good chance that if there's any kind of pullback or the C word crash, that the government's going to step in and take care of it. So you generally know, have a good idea that the market's going to continue to go left to right, I think.
Possibly, I don't know. I mean, I think yeah, when the new guy comes in, I think if there's a crash, they'll definitely orchestrate something. Um, Especially if the Republicans control after the midterms.
Right.
They
I think
won't
it's
let.
too painful for people to go through. I mean, it's been that way since our existence, pretty much.
Yeah, but I mean, I'm looking at all these things that the government is coming out with, and um, I'm confused because the Republicans are saying so many negative things about this guy Mamdani, the socialist in New York, but they're doing the same things that Biden did, right? These Trump accounts where they're giving everybody $1,000 or something like that from the government. You got a baby? Here's $1,000. Why? Hello? It's like that's
Yeah.
you just yeah, I mean you just give everybody free money. Like I don't get it. Um,
I think when we get start, treading over the line of politics, it's
mhm.
unfortunately that's entrenched, right? So
Yeah,
they do
you
whatever they
know,
need to do.
like Trump comes out and says, "Oh, yeah, interest rates shouldn't be higher than 10% on credit cards." Okay, why? I mean,
Right.
what are people going to do that, they have credit cards? Okay, are they going to pay down the credit card? No. I mean, you could do that. That would be so much better, right? You could say, okay, whatever your interest rate is, you're going to pay the same amount, but the credit card company will then take the extra interest and apply it to your balance. So it's kind of like it's forcing them to pay off, or not even forcing, but it's taking their own money to pay off their balance. You know what I'm saying? Does that make
Yeah,
sense?
I do. Yeah. Yeah.
Instead of saying, oh, okay, we're just going to cap it at 10% so your payment is lower. Well, okay, great. I can go buy more fast food. Well, no, that's not the point.
Right.
That's not going to help anybody.
You don't change the behavior.
Yeah. And then
I
after
mean,
a year, it goes back up again. You're like, oh, shucks, I got to go pay more money again. No, how do you help the situation instead of just giving away money? That's what we did after COVID. That's what we did, for years. And they just here, money, check, free check. And that's kind of what got us into this mess.
yes, I completely agree with that. You
So,
know, if you're just given some things, plainly we know we're just going to be continuing the behavior, right? It's just there's no accountability to anything.
mhm.
Remember?
Yep. And then next year is going to be the 250th anniversary of the United States. So, Trump is going all out. He's going to have a UFC fight at the White House. He just said
I
he
didn't even
signed.
know about
Yeah,
that. Jeez.
at the White House, they're gonna bring the little whatchamacallit, the ring, and they might have it in the ballroom if the ballroom
Are they
is
going to
built
have
by then.
Fed governors have UFC fights against each other?
Yeah, that'd be funny. Senators fighting each other. Democrats versus
Yeah, there we
Republicans.
go.
Arr!
That would be entertainment.
Yes. Loser gets killed. Loser gets shot. I would love that part.
Yes.
Oh, and then he signed an executive order that he wants to have a F1 Grand Prix style race in Washington, D.C. So they're going to shut down the streets of Washington and have a F1 race, which is okay, cool.
Excellent. Excellent.
Yeah. Who's paying for all this?
Us.
Yes,
We the people.
we the people. We the people. Um, so, you know, we were supposed to get money back from all these tariffs. And now the big beautiful bill. Supposedly, people are thinking that they're going to get really big refunds this year, 2000. For last year. If they do, that's great. But that money's coming from the government.
Yeah.
In the meantime, we might be heading for a shutdown. I think the shutdown is almost off, right?
Yeah, he made a deal, so but it still has to go through. I think it's being voted on, I think Monday, I think.
Yeah. But the shutdown happens tonight or tomorrow over the weekend. I don't know.
Yes,
But
yeah.
I think Kim and Schumer, they came up with a deal, and um, so what they did was they broke it down into six different bills instead of just one big spending bill. It's six different bills, and five of them are going to go through. One of them is the funding for the Department of
Homeland
Homeland
Security.
Security, and that
That's the
one is
sticking
going to
one.
be a little bit held up.
I think
So,
the Democrats are on a little bit of a break, and then that's why they're going to vote on Monday. So it'll
well,
be,
no, the House has already gone. The House is on recess,
yeah, okay.
so they would have to come back to vote on it because this was from the Senate. So the House has to vote on it as well. So they'll be back on Monday. So I think that's why. But so we might have like a shutdown for a day or two.
We're used to that.
Yeah. So stuff like that, and then yeah, the on a side note, on another note, I just read or heard yesterday that the House has passed a resolution that anyone can invest in private investments. You no longer have to be a accredited investor
Hmm.
as long as you pass a test. Now the Senate has to vote on it, and they're gonna probably, kick it, change it, do something to it, maybe pass it back. But it does look like that something of that line is going to pass, especially because that sounds like a Republican type of issue.
Do you know what
Uh,
kind of, just like a stress test of a way, or how is it ever going to be what kind of test?
like some kind of financial literacy test.
Mhm.
Um, to see if the person is knowledgeable enough to be able to invest in more risky activities. So, if you're not an accredited investor is anybody that has a net worth of $1 million, not counting your own house. Now, supposedly that's what makes you financially savvy.
Right. Yeah.
Okay. Yeah.
You
Yeah.
have more money
No.
to lose. You just may not know what to do with it, but you can.
Yeah, doesn't matter how you got the money, doesn't matter how long you've had the money, but as long as you have that, then you are financially savvy enough to invest in like private real estate deals, private equity companies, venture capital, hedge funds, um, oil and gas mining, oil and gas drilling, all kinds of different things that are not open to the poor man on the street because
Yeah.
the poor man is not financially savvy. So,
Makes total sense, right? It's crazy.
I actually agree with it.
Nonsense.
I
Yeah,
agree.
to some degree.
Yeah,
But
I read about it. The first time I read about this was in those Rich Dad, Poor Dad books. And the guy was like, "Oh, hey, rich dad, I'll just invest in whatever you invest in." And the rich dad was like, "No, you are not allowed." Why not? Well, because you're not rich enough. You mean there are investments just for rich people? It's like, yes, there are investments for rich people, and they're better than the investments for the poor people. Oh, then why can't poor people invest in them? Oh, because they're not smart enough. I was like, oh my God, I didn't know this. This is crazy. What is this? I got to find out about this. And then I realized, oh, everybody knows about that already,
yeah,
except the poor people reading the book.
exactly. Robert Kiyosaki,
Yeah. So if you're poor and you're
legend.
reading that book, I guess rich people don't really read that book too much. But yeah, the poor people reading the book, they're like shocked. They're like, what? Oh my God, there's a conspiracy. No, it's meant to protect people. And I think it does.
To some degree, yeah, of course. But you always think of those outliers, right? In general, I
Mhm.
think it's there for a reason, but
Yep. And so yeah, they're trying to take that away, and have it so that anybody can do it if you pass a test. Um, I don't know how they're going to administer this test,
right, exactly.
right? Like, I've taken tests where I wasn't supposed to be cheating, right? Like it's an online test, most likely. It was an online. It was for the Series 3 exam. right?
Yeah, I
Um,
remember. Mhm.
so you have to have your camera on, and there's somebody that's monitoring you and watching you the whole time. You can't have any papers on your desk, can't have anything on the walls or whatever. They check, you have to show them the whole place where you're sitting so that they can tell, oh, you don't have cheat sheets all over the place or
Like,
anything.
Alan, what's on that table behind you right
Exactly.
there?
No, nobody else is allowed to be in the room, all this kinds of stuff. And then you take your exam, and I'm sure they do the same thing for other types of exams as well. Now, I took another exam for portfolio margin, at Schwab. So I told Schwab, hey, I want to get portfolio margin. Now, on another account before, a few years ago, they just turned it on. They're like, oh, okay, here's turned it on. This time they sent me a test. They actually sent me like a PDF, and I had to fill it out, do the answers, and send it back to them. Well, I did not know all the answers to the test, but ChatGPT sure did. You know, I don't
Yeah,
know. I don't know what I would have gotten if I didn't have ChatGPT, but I got 100 on that test. And if they do
yeah.
that, if they do the same thing, then yeah, everybody is going to be able to invest in everything. Um,
Well, who knows about, like you just talked about, like the technology is changing so quickly. I mean, who knows how they're gonna be able to administer
it's going to be BS. It's just
it. Yeah,
BS. It's
of
like
course.
it's like okay, everybody just let everybody invest in anything they want. Like I don't know. Um, but there's this I mean, there's a reason for these restrictions, right? So I've seen ads online recently and for the last couple of years for automated trading, where it's like, oh, hey, we have this algorithm and it'll trade for you and you'll make, better than S&P 500. And it's all passive and it's all automatic, and set a time to talk to our sales guy, and he'll explain you what we do and how much it costs.
Mhm.
So there was this one particular company, NURP, NURP, and they had ads all over the place. They were trading different types of. They had different algorithms, and some were forex, some were futures. But I think mostly they were forex, and they were charging upwards of $20,000, sometimes $30,000 upfront fee, and then they were charging you per month to access their bots. And then these bots, you would have to open an account at a broker that they told you to. You put your money in there, and then the bots would trade for you automatically. So, markets do well for a while. These automated strategies can do well for a while, and then the market changes. So they don't work anymore, right? So I don't know if you remember, you probably do. Last year we had that one day, was it last year, or the year before, when the yen carry trade kind of blew up overnight?
Yes, and they're talking about it in the news now, right? It's like come back a little bit.
It's going to happen again, yeah,
Yeah, it's
because
gonna happen again.
because the
Yeah,
rates, the Japanese rates keep going up. But
that's
that
right.
was like a one night overnight thing, and everybody freaked out about it. The VIX was up like to 70 or something,
Right,
and
literally overnight.
yeah, and so volatility went up, and all the forex things, went nuts, and so their bot lost a ton of money, almost all of it.
Mm.
And so now, if you look at the reviews, like I was looking at the reviews, and there were so many people complaining online. Oh, I lost all my money. This is a scam. Da 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 da. We need to sue these people. We need to get together and we need to hire lawyers. And I'm going to sue them. And oh, where's the government? They shouldn't be allowed to do this. And I'm going to complain to my lawyer, my whatever. And I'm thinking to myself, the problem was that these people were not accredited because they're not under the same restrictions. So they could have anybody and everybody be their customer. And there was nobody on top of them. Like I remember when we did the hedge fund, right? There was so much regulation and so much oversight that
Yeah, you
if
wonder how you could even do it.
yeah, like if we had the wrong word on a document, there was somebody pointing that out and be like, hey, you need to fix this right now, or we're going to find you. It's like, okay,
Yeah,
chill.
your hands are like this the whole time.
Yeah, I mean that was the worst
Right.
part. Like the all the dealing with all the paperwork and the bureaucracy was like horrible. Like
Mhm.
most of the day was passed just in that stuff. But these
The
guys,
trading's fine. Oh, that's fine.
yeah,
But
the
it's
trading,
the BS.
yes. And so these guys didn't have anything. They didn't have to do with any of that because they didn't have those restrictions, and they could take anybody, not just accredited people. Um, but the problem when they lost money was they couldn't handle it. And these were people that were putting their life savings into this.
Yeah, it's terrible
And
for sure.
so I don't think that this is a good idea that, you pass the test and you can invest in whatever you want, because you have to have the ability to say, hey, you know what? I could lose all my money. I still need to be okay. But when you're just starting out, or when you have lost everything, or when you're like running out of time, you get desperate and you're
Hmm.
like, hey, I see this. This could be my last chance. I need to put all my money into this, no matter, my life savings, or my rent money, my everything.
Yeah,
And then it goes kaput because it can.
yeah.
So
What's the
I,
answer? That's the question. It's you know,
I
I
don't,
don't know.
I don't like this thing. I don't like, you know, but yeah, nobody asked me. So
Yeah, it brings up, I see why it's in place. I completely do. It's just like I think you have to look at like how it's in place, right?
yep.
Because if
Yeah.
people just can get around it, like we're talking about, it's just going to get abused. People are going to lose a lot of money.
Oh yeah.
Whole story.
Um, like for our hedge fund, um, before, hedge funds were not allowed to advertise. Like private funds, private investments, they were not allowed to advertise. You had to um, have contact, or you had to know the investor,
Hmm.
and you had to know that they were accredited or they were rich enough to invest in your fund before you offered them the ability to say, hey, would you like to invest in my fund?
Yeah, you can't.
Then a few years ago, I think during Obama's term, they passed a new one that there's a new type of regulation or a new type of fund that if you go that way, you are allowed to advertise. But the restrictions is that um, everybody has to prove that they're qualified to be in the thing. Because the other way, they just had to say yes or no. Right? They just say,
Yeah.
"Hey, are you a credit investor?" "Yes, I am."
Sure I am. Of
"Okay,
course I
come on
am.
board.
Yeah.
Come on board. There you go. You're in."
Yeah. No problem.
Because I know you, right? And I've seen you drive your Rolls Royce, so I know you're accredited. So if you tell me you're accredited, I don't need to verify. But if I'm going to advertise, then yes, then I have to have some kind of proof from you or from your accountant, or see your bank statements or something that shows you have plenty of money and that you can come in. So I have to have that proof and I have to keep it. Um, and so that is, that made things get a little bit looser.
Hmm.
But now, if everybody just has to take a test, then that's going to be all over the media. Every single investment opportunity is going to be all over the media, all over Facebook, all over YouTube, saying, "Oh, invest in
That's
my
what you
thing, invest
do.
in my thing,
That's what
invest
you
in my
do. That's all
thing."
you do. Yeah. Yeah.
And because now they're going after every single person. "Oh, you got $20,000? Come on, invest in my thing. You got $50,000? Come invest in my thing." And it's going to be a lot of shady people jumping into this, and it's just, I don't think it's going to end well for a lot of people. I was I was watching YouTube just a couple days ago, and this ad popped up, and it was like, "Oh, hey, we found the cure for diabetes." So I'm like, "Oh, okay, yeah, what is this?" So I don't know. I clicked on it. I don't know, something
It hooked
something
you in. It gave you a
something
little
caught my
hook.
attention. I
Yeah.
clicked on it, and it's a video, and it starts with 60 minutes. I don't know if you, I love 60 Minutes,
Yeah,
and
me too.
the show starts, it opens, it's like a book opens, and then you see the clock and tick, 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 you see the sound of the clock.
Brings you back years to when you're young.
Yeah. And so you see the 60 Minutes, and then you see some guy standing there in front of the story that's open. And the guy that was standing there was this doctor from CNN, Sanjay Gupta.
Oh yeah.
So he's sitting there and he's talking about, oh, there's a cure for diabetes, and Halle Berry has done it, Tom Hanks has done it, this guy has done it, and this celebrity has done it, and this doctor's on board, and this doctor's on board, and he's going on and on and on, and I'm like, wait a minute, Sanjay Gupta doesn't work for 60 Minutes. Like, I've watched 60 Minutes.
Oh God.
He's on another
Yeah.
he's on another he works for another company. He works for CNN.
Yeah.
Has he ever done like this? I'm like, I haven't seen this episode because I watch all of them,
You're
and
like,
I'm like,
this is
I've
not
not seen
adding
this
up.
story.
Yeah.
And so I looked it up, and damn it, it was AI, 100%. But it was so good. My God.
And
If
only
you're
getting better.
Yeah. So imagine this. Now you have a video popping up, right? And it's Elon Musk, and people have used Elon Musk for this type of stuff in the past, and be like, "Oh, hey, why don't you invest in this new company I'm about to start? And all you have to do is take a test, and then send me wire me money."
Hmm. And people just see the visual and they don't connect it, or they have not seen it, like you just said, and it's too late.
Yeah. So I think it's going to be
Ah,
really bad, but that's another thing. Again, that's above our pay grade, right? We
yeah,
are
I have
going
no
to
control over
we,
that.
we are going to keep promoting passive trading and being safe. Um,
Yes.
and I myself, I'm probably going to stay away from futures. I learned my lesson. I'm trading over trading, and don't do that.
But
Don't.
trading is always has lessons. It never stops, right? That's the beauty of it, right? I mean,
Yes.
way,
Yeah.
right?
Yeah.
It's never
There's
ending
there's a
anyway.
million ways to lose money. Don't help.
I think it's most important at the end of the day, you learn from it and move on.
Yeah. So that's the case. And did you buy the dip? I think you should. Long term, I think it'll work out. So that's my take on it. And let's now do what everybody's been wanting. Um, and let's see who won the January SmackDown. I think everybody's been like, waiting for this, and they're like, Alan, can you shut up, please? We want to know who won.
I know. Fast forward to the end here,
Yep. So I'm gonna let you go ahead and
right?
share.
And I will just say we have a new winner.
Sorry, Mike. That's good
Mike
because I
had
didn't know
a
what to
good
give you.
run. He had a
I didn't know what I
run.
was going to give
You're
you if you want again.
gonna give him a silver bar. All right, here we go.
All right. Highlight the winner.
The winner is XOM. Am I correct?
Oh my God.
Yep, nudged out AMD.
So, not a tech company, not a
Right
mining
after all this,
company,
right after all this.
not a leverage ETF, not not something that anybody would have expected. XOM. Exxon Mobil. All right. Well, Kisho, I am not. I can't pronounce that. Kyo.
Yashimoto,
Ya
37.
Yashimoto. Congratulations. You are the winner of the January SmackDown. Please email us help@optiongenius.com with your name and address, and we will be shipping out your prize as soon as possible. Congratulations. You almost made 10% on your XOM, which is pretty good because, I mean, there's a lot of people who lost. So January was good for oil and the markets, or for oil producers.
Yep.
XOM,
Congratulations.
I think is at like an all-time high. Same with Valero. Valero had earnings yesterday. They did really well. And even I think CVX, Chevron is at an all-time high. I think so. Good place to be in. Never would have expected that one. So
I
congratulations.
know we're it's like a little blip. We're just talking about it
Yep.
and being the winner.
And so let's see who was Who was in charge before? Robert Haley with Tekla now is negative. So it was up like 20 some percent and now it's negative. My God. Um,
Incredible. Yeah.
PPLT, Mike Luttrell's also negative, negative almost 10%. He was in second place, I believe. Oof.
But like we said, you look at the macro view and the direction, right? And what's your time preference on these?
Yeah, so I mean, if we had ended one day earlier,
Yeah, it would have been like,
one of them would
hey,
have won. We
I
ended
mean,
it
Michael
today.
Luttrell, maybe he wouldn't be getting a silver bar sent to him, but he's in
Yeah,
Minnesota.
he would have won again. But oh my goodness. So yes, so that ends the end of January, and we are going to start February. So the rules are very simple. You see these tickers for companies. You choose one ticker, you put it in the comments of this particular video, and your deadline
So February
is
1st is Sunday, so obviously not there.
okay. You tell me when's the deadline? February 2nd?
Well, we could either do the second or third.
Okay, let's do the third.
Okay, let's do the third.
So the third is Tuesday. You have
They'll give you one trading day to decide.
yeah, actually let's make it the fourth.
Fourth? Okay.
Yeah. So right before, so like what, like 12? No, you gotta have some time. So um like what time on the fourth? What time do you want to cut it off?
Say 1 o'clock. 1 Eastern.
1 Eastern on the 4th is your deadline to put your symbol. And if there's somebody that puts in the symbol ahead of you, then they get the symbol. It's first come, first serve. You have to pick a different symbol. And then whichever symbol has the greatest return at the end of the month when we finally close will win. And then we send you a nice prize. So Yashimoto, congratulations. XOM. That's wonderful. It'll be very interesting to see what happens in February. I think it's a whole new ball game. I think it's a whole new ball game.
Yep. Every month is.
December and January was kind of the 2 months of the metals, right? It was like the metal and the
Metal
mining, and
Mania, that's what they're
yeah.
calling it.
I don't know if we're done with that, but we took a big hit today, so we'll see what happens. The AI that was, before that we had AI people, AI trades, AI tickers. Those have kind of gone to the past. No, Nvidia's not. I mean, Nvidia's here,
Yeah.
3.6%. Somebody voted, but
Oh, Lori, yeah.
not anywhere close to being able to win. So AI has gone down. Google, like, look, Google's negative. Google's flat basically for the month. Um,
Oh, look at
Palantir's negative
Volunteers taking
17%.
quite a dump. Yeah.
AMD almost got it as a chip name.
Palantir's has earnings in a couple days.
Mm,
Be interesting to look at some of these that I'm looking at. Like MSTR had a huge dump with Bitcoin. They have earnings coming soon, so be interesting to see what happens with some of these.
right. And so when we have the deadline, after that is when we will get the price.
Yep.
So if something happens on Monday or Tuesday, it will not be incorporated into the price that we start with. Just letting you know. And there's no purchase necessary. Anybody can play. Just put the ticker in the comment.
That's it.
Sounds good. All right. Well, it's been a very eventful week.
It has. It's been an eventful January.
Yes, I'm gonna go
What a
home and cry.
long month, really. You
It's
think
been
about January, it's like feels like 70 days. Like how long ago was Christmas? It feels like 3 months ago.
I don't remember. I don't remember
Yeah,
Christmas.
seriously.
Like what? New
What?
Year's. When was that? New Year's?
Yeah.
Yeah. Oh man. Well, after today's debacle, I think I'm gonna go home and cry.
No, never, never, never.
Oh yeah, really? Well, yeah. Well, you didn't lose that one. You didn't lose.
No, but
You,
you're always in the game.
yeah.
We
But
forget about our winners.
yeah, but hell, when you're down six figures in one day, it kind of hurts.
You get a 24-hour rule. You get to be
Yeah, you
sad
get
for
to feel sad for 24 hours.
24 hours, and then
You
they
get to
tell you
smack yourself and get back on
back
the
on.
horse.
Yep,
Oh
that's
my
right.
God. Oh, on another, we do have I got the market power alert. So I don't know if our signal is still there.
Let me see right here. No, it's dropped off quite a bit at the moment.
Oh,
So one of
okay.
the early ones. So we're at like 32 right now. 30, no, is that right? Yeah, 32, 37.
What do you mean 32, 37?
The SPX is down 30 points or so.
Right. But
Uh,
what's the MP number?
MP is MP is at 0.55.
0.55? So half?
0.55. Yep.
Yeah. Okay. So yeah, it was up over one, I guess,
It hit
uh,
about 1.2 today.
and then came back down. Okay.
Yeah.
Well, that is interesting. Because as you know, Matt, but maybe our watchers and listeners do not, I am currently back testing the double dip version of market power, which is something, give credit where credit is due, was come up with by one of our members, Teresa. And basically, it is the idea of, hey, when we trade market power, when we get the signal, but we don't trade it until the very end of the day.
Yeah.
But what if you have a day like today where you have a
Mm.
signal earlier and at the end of the day, there's no signal? Could you have used that information to place a trade and win on? And so the idea is we will also, in addition to market power, where we trade at the end of the day, you leave that as is. But if you get a signal in the daytime early, like today, you place a trade at that time as well.
Do you see my
So
grin? We're all very excited about this,
yeah.
right? Because
And the back test is done. So far, it's done really well. I've been testing different things. I'm testing 0 DTE. I'm testing 1 DTE. I'm testing different strikes, different credits, different stop losses. It's a labor of love.
tedious, very
It is
tedious,
very
but
tedious.
necessary, but necessary.
It is necessary. And the cool thing is that, like last year, we had I had it here, I think. We had 53 market power official trades. Now, there were some trades that you did not take or missed, but officially we had 53 trades.
Yes, but overall, look at the track record on this
Yeah,
baby.
the track
Okay, I'm gonna
record,
do a little of this right here. Okay,
the track
look
record
at
is
the track
amazing.
record. Okay.
But we did have 53 trades, official market power. Now, the double dip would have had about another 60 trades. So
Yes.
it would have been in addition to the 53. So now we're looking at, 100 or over 100 trades just from the signal. And that doesn't count Phoenix trades, which we do every time there's no market power signal. So if you take market power and you put in the double dip and you add in the Phoenix, I mean, we're looking at what,
Yes.
150 trades? No, more than that.
Yeah.
I mean, there's like 200 some trading days in a year.
These are the averages, right? We've had years where we've had way over that
Yes. Yeah.
trades.
So I looked at last year, and last year there were over 100 double dip trades, and we had no, sorry, 90, over 90 double dip trades, and we had 59 official market power trades. So definitely well over 100 trades. So if you do it that way, you got, well, I guess you're trading twice in a day, but not
Yeah,
every
you
time.
can. Hmm.
Um, so
It's going to be very active, very exciting.
yeah, and I mean that's great,
Uh,
but how are the returns, right? What do the numbers look like? And they're really good
that's
so
right.
far. So far, they're really good. There's still stuff I want to tweak, test different things. I'm trying to get a little bit more money out of it if possible, but yeah. So I'll be done. Hopefully, I'm doing it as much as I can. That's my focus, and so hopefully I'll be here tomorrow. I'll be at the office tomorrow, Saturday and Sunday. And hopefully I can finish 2025 numbers by Sunday. and then I got to do 2024 as well, so that we have 2 years of records, and then we'll add in 2023. So
You go.
it's going to be a while. We're going to have plenty of data. And I think once 2025 is done, we should be able to roll it out to everybody and be like, hey, this is preliminary. This is what we've come up with. Let's go ahead and start rolling it out and start doing it. And I think we'll learn as we are trading it live as well. We'll see
Of
things.
course, of course. But
So
yeah, the back testing it's a lot of required work, I would say.
yeah, and the data is also not not suspect, but it's there are issues sometimes
Mhm.
with the data where the data could be off a little bit here and there. So when we do live trading, definitely it will give us more basic, better information.
Sure.
But I think it'll give us enough of a record to say, yeah, there's something here, or there's nothing here at all, and we should move on. So we'll know for sure. But right now, it looks really, really good. So
Fantastic.
yeah, so excited about that. Yeah, good things coming for market power. We also have this month for February, we're going to have a new workshop in the club. We have a guest coming in to teach that, and he's going to be. I'm not sure exactly if he's going to what he's going to be teaching it on. I mean, I know the strategy, but there, you can trade it on different things. And so he will be teaching, I believe, how to trade it on the E-minis, which are futures contracts for the S&P 500. I actually have been using it on oil
Mhm.
and testing it on oil, and it has done fabulous, like fabulous.
All right.
Uh, and so that is coming next month. And also, Uh, so I think I've told you this, that we have like I've done, we've done charity things in the past, right? We did the passive trading scholarship. We've done, like in December, we had like a 1 week time frame where like, oh, if you join any of our memberships, we'll take the revenue and we'll donate it to charity. And so we also have, hey, if you donate to a specific charity, I'll do coaching calls with you.
Mhm.
And so we did that recently, and we had several people take me up on it. Five of the people that I talked to, I asked them I asked them a question like, hey, why are you trading? And they all five had the same answer, which was, I hate my job, I want to quit. And we were on the coaching calls last night, and somebody said the same thing, and I'm like, we're really on there's something here, and I think we need to
Sure.
focus on this, and I think we need to come up with some kind of plan, strategy, or whatnot, because we have the tools, but we don't talk about it in a way of, oh, here's step by step how to quit your job. And I think that's what people really want. That's the pain they have. That's what they want. That's what they'd be willing to put their time and invest in. It's more than, oh, hey, I want to make more money, right?
Right.
It's
Where's the roadmap to this? Like, what are the steps I need to take to get there and
yeah,
do it?
give me the step by step. And so I've been focusing on that. And there's a thing called FIRE, Financial Independent Retire Early. So I read a couple books over the weekend about that and
Many
how that
fire groups.
works.
Yeah,
There's a lot of books.
a lot of them.
And so I was like, man, these guys, they're, the FIRE people, they're on to something, but they're missing the boat, because, for them, it's the basics are really, hey, you cut your expenses, so you spend less money, and you take the savings and you put it in index funds. And you keep saving and saving, saving until you get to a certain number, and then you can quit and you can live off of, you can withdraw 4% every year. That's
The
that's fine.
4% bothers me.
So, well, the first thing is they want you to cut all your expenses. So they want you to live on like 40% of your income.
It's very hard for people.
Yeah. So what does that mean? That means, well, you bike to work, you brown bag it to work, you, you don't go on vacation, you go camping instead because it's cheaper. You only have one car in the family. If you're married and you don't have kids because they're expensive. I mean, all
Mhm.
kinds of stuff where It's like, I don't know. Why would I want to live like that?
Uh, yes, but that part can work and certainly help you, but let's face it, the majority of people are not going to do that. They're
It's
not going to
very,
go through. Yeah.
it's very difficult, you know?
Okay. How many people are going to do that?
Yeah, I mean, you have to move somewhere cheaper. Um, all this requirements that, or all these things that you can, because it's all about freedom. It's like, would you rather keep your car or would you rather retire 6 months earlier? Well, I mean, we're still talking about 15 years down the road.
Yeah.
So,
Yeah, and you're
okay, it's,
talking, I mean, there's good and bad, right, to both of these.
yeah, people have done it and people
I
love
don't
it.
take it away from them that they're doing. I think,
No, there are certain people that can do that.
yeah.
Most people, like you said, cannot, and they don't want to. And so then you do that. That was one thing. And then yes, you take out 4% and you live off that. Well, you've already like cut your all expenses, right? You're already living like a poor person. So then yes, you could live off of 4% probably. Um, but you're investing in index funds, right?
Right.
Which yes, they beat mutual funds, they beat most, advisors. You're not paying fees, which is all great, but you're not in control. You do not control your own
No, you
future.
don't. That's a huge, huge piece of it.
Yeah, so it's up to the government, it's up to these fat cats on Wall Street. They play around with it, they manipulate it. Oh, hey, we're going to lower rates, that'll push it up. Oh no, we're going to raise the rates. Oh, that's going to push it down. You have no clue. You have
Like
no.
anything, you've given the power to them.
Yeah. So that's another thing that I don't like. And that can easily be replaced with passive trading, you know?
Yeah.
And so I'm thinking about this. I'm like, man, the people that think that way and they have that desire, that's wonderful,
We've been
right?
kind of programmed into that way too. I mean, you with 401ks and everything like that, you just give your money, put it in a 401k, which is great and all, right? But what does it go into? Most likely it goes into these funds, right? Over and over and over again. You have limited authority to it. You have limited access to it. You've kind of lost all your power to it in some ways,
Mm-hmm.
right? And I haven't even begun to touch on inflation. So we have to do all this stuff to beat these forces, right?
Yeah.
So it's imperative that people learn this information.
Yep. Yep. And and the idea was, okay, you take out 4%, but you factor in 5% growth. So your account is going to grow at 5%, you take out 4%, so it still grows 1%. That's wonderful. But instead of 5% a year, what if you could get more and you can compound that faster? You'd be able to retire, you know, decades sooner, have more control over your life, have more control over your finances, and maybe not have to give up all those things that, your Netflix and your coffee
You mean
and
like life and all its wonderful
yeah,
abundance? It's true.
you
Yeah.
know,
Yeah.
going to the, your friend's wedding because it's on an island somewhere. You can't go because, oh yeah, I gotta retire early.
Yeah.
I don't know.
It's there's a balance there, and that's what the people we're trying to reach because it's definitely possible.
Yeah. So now it's in my mind. Okay, this is the person I want to help. I want to come up with this. How do we do this? So that's kind of the focus that I'm moving towards. So like, okay, how do we take everything that we have and how do we gear it to a person that their goal is to quit their job? So that's where we're going. So
Yeah.
I'm excited about that.
Me too, for sure.
Yeah. So all right, but you, my friend, you are not allowed to quit.
No, why would I? I love this.
No, no, no. You are
No,
not allowed to go anywhere.
no, I love what I do, and that's
Yeah, I took over for you on the coaching calls yesterday. People were actually disappointed.
I doubt that. You
Yeah,
say that.
where's
No.
Matt? Where's Matt? What are you doing here? I'm
Yeah,
like,
sure. It's good. They get to see a little bit, little mix.
yeah.
Yeah.
So cool. All right, my friend. We've gone over today. But I think, yeah, we had a good discussion. Um, and yeah, so give it a few days. If you're going back into the metals, give it a couple days. See
Yeah,
how,
caution
see,
before you get back in that pool.
wait till they tell you what they want to do. And then perhaps, yes, buy the dip.
Buy the dip. There you go.
All right. Have a great weekend. And I'm going back to back testing.